Morning, everybody. How's everybody doing this morning? Great to see all of you joining us here this morning. Well, we got a pretty big crowd today. This is great. Fantastic. We're going to give everybody a couple minutes here just to kind of get in here. The market just opened, so we're not going to take a trade or we're not going to do anything for the first couple minutes anyways, so that's totally fine. Hope you guys enjoyed your weekend and you guys got some rest and some time away from the screens, ready to get back at it. Can everybody do me a quick test of picture and sound? I want to make sure that you can hear my voice and see the screen. I want to make sure that we're all here and ready to rock and roll. That'd be great. Darren, great. Fantastic. We got a lot of traders in here today. It's going to be great. Morning, Steve. Thomas. Thanks. We got Andrew, Alan, Anthony, Barry, Bath. Hey, Bob. Got Brian's here. A couple Brian's. Burzen's here. Great to see you, Burzen. Carlos, Catalan, Christians. We got some Daniels. Dan Benjamin's here. Dan, Danny, Daryl, Darren, David, Esther. Some Dons. We got some Eds. Francis. Jeff Zimmerman in the house. Jeff, I'm going to promote you to panelist just in case there's something that we need to do here and bring you over. Gordon's here. Great. Hendrickson, JB, James, Jay, Jen Moody. Hey, Jen. Jess. Jim Pickus. Good morning, Jim. Joe's here. John's. Bunch of Johns. Pretty familiar name. A couple Jose's. Buenos dias. Kenneth, Kurt, Chris. Congrats. You just got a promotion. Sharpshooter says, yeah. Lisa's here. Marty, McInnes, bunch of Michaels, Nicks, a lot of Nicks in the house here, a bunch of Pauls. Good morning, Phil. Hope you got my message. Thank you for all the understanding. It's been a wild couple days, but I'm back in the saddle. Uh, for those of you that don't know, I spent 2 nights in the hospital here recently, and I'm glad to be alive and well, but I had a virus from hell, and I'm glad to be back. Swinging hard, swinging strong. All right. So we got a couple Renee, Rouse, Richards, Robert, Sandy, Scott, sharpshooters here, Sky, Steves, bunch of Steves. Good morning, Steves. Okay, great. So listen, this is going to be the beginning of something that I've never done before. I've been doing a lot of events for the last 10 years, and many of you have been to some of my presentations before. Some of you have traded with me. You guys have seen me build systems, develop strategies. Some people call me a master trader. I've been the teacher to instructors. Some people call me a systems architect. Some people call me the just a great trader, right? But what I've been doing recently has been just kind of paying attention to what we need as a community versus what we've been doing. We've been doing a lot of webinars, right? We've been doing a lot of webinars, a lot of sales webinars, et cetera. And the truth of the matter is you guys need help, right? You need help, you need guidance, you need people that are experienced to step in and actually take some time and share some of the things that they do successfully, some of the things that have helped us successfully. And many of you don't know that I trade several different strategies, depending on the time I have to trade, depending on the objectives that I need to accomplish as a trader, whether I'm looking to day trade or swing trade or just look at trend trading or reversal trading. Throughout the years, I've stumbled upon many things by accident, kind of just building systems and looking at patterns. I've always found that I've been somebody who is good at pattern recognition. I can just see things in the market that many people can't. And maybe it's a gift, maybe God's blessing for me, who knows? But what I do know is that I'm really good at identifying things that are repeatable. My mind sees that, right? And it's helped me a lot as a trader because it's helped me identify clear signals versus stuff that's just noise in the market, right? And I'm sure many of you can relate with that. You've probably looked at the market, you've seen patterns, you see repeating things and indicators and systems, et cetera. And truthfully, I just see a common thread around traders that trade with the market versus against the market, right? Reversal traders can make a lot of money if they're really good. You got to be a really good trader to be a reversal trader because you're always fighting the market as a reversal trader. If you're a directional trader, you normally will be able to capture bigger trades. That's not to say that every day is a trending market, but if you play the cards right and you understand risk and reward and you understand the approach to how we can trade with the market in the conditions, normally the markets will trend enough for you to be able to pull pullback trades or types of trades that can be quite efficient if you understand how to emphasize what that means, right? And so over the last year, I've been looking at different ways to trade directional strategies. And uh, I built a strategy that I've been trading, and it's not difficult. It's very simple to do and learn, but it was so powerful that I actually had my guys code an algo first because I wanted to backtest it. I wanted to optimize it. I wanted to see if what I was actually seeing was the real deal. I wanted to see, hey, is this really this good? Like, is this really creating the setups and the performance that I'm seeing with my mind? Because the mind can play tricks on you, right? Like if you think the strategy's good because you see a bunch of winning trades, but how does that go back a month, 6 months, right? A year? We coded a system called the HATT Signal System. And today and tomorrow, we're going to be talking about it through discretionary trading. The next 2 days is a workshop for discretionary traders. Okay. In a couple of weeks, we're going to release an algo that is this exact same system. And why is that important? Well, because this is a system built on minute bars using Heiken Ashi candles, we're able to test very, very large sample sizes. And when I mean large, I mean very large. Like I'm going back several years of optimization. Normally, when we're building tick-driven systems like using range bars or Renko bars, we don't have the privilege of backtesting for a year because the platforms can't handle huge loads on the computer, right? You can't really backtest. You couldn't do that on Ninja. You wouldn't be able to do that on MetaTrader. You wouldn't be able to do that on TradingView. Nothing. You're not going to be able to go back years of tick data. Your computer will just shut down and blow up, right? But when it's a minute-based system, we have the privilege of going back large sample sizes. And I truthfully, over the last month, have been helping prepare the AQS. I know you guys are probably familiar. Tomorrow, we're launching the very first quant program that we've ever launched in the industry. I don't think there is a program that exists in the industry for quants and for algo traders. Tomorrow, we're launching that, and it's going to be an exciting event. Nonetheless, one of the strategies that we are bringing into that program is this system. And why am I even leading this boot camp and this workshop with this story? Well, this strategy held up for years when I back tested it. This strategy was so good that I said, you know what, we're going to do a boot camp. We're going to do a boot camp. I want to show everybody what we're doing here because I stumbled upon this by studying entry patterns for another strategy. Right, I actually started studying Heiken Ashi candles as a way to enter on liquidity trading systems that I trade with, and I know I taught a boot camp recently on entering liquidity levels using Heiken Ashi candles, etc. But when I started taking the Heiken Ashi bars and bringing it into trend trading, that's when I was like, wow, okay, like there's something really powerful here. And for the masses, what I care most about is not just putting systems into the market and people buying them. What I care most about is everybody making a lot of money when they buy it, right? Like I really like when I see everybody that is in our community making lots of money with their trades. I don't like it when only a few traders succeed because the strategies are too complicated or people don't really like the way it trades, right? So today, what my goal is we're not doing a PowerPoint presentation. We're doing a workshop. I'm going right into the charts. I'm going to be taking notes. This is going to be a deep dive. I'm going to give you guys the document. You guys can keep my notes. I want to talk about why I chose the indicators that I use for this system. I'm going to show you what they are. We built a signal system so you can do it manually. If you want the indicators, we put it on the marketplace. It's there if you'd like to purchase it. It's your choice. We'll talk about the signals in a minute, but you can use TradingView, you can use NinjaTrader, you can use Tickblaze, you can use any platform that has EMAs, Heiken Ashi, and an RSI. Like it's not complicated. And we're going to get into that. And the reason it's called HATT is the HATT signal system is called the Heiken Ashi Trend Trading Signal System. It's just an acronym for the tools that we're using. And the reason it's a trend trading signal system is because you can capture some huge trades. Yes, it is being recorded, and you guys will all get a recording, and you guys can ask questions in the chat box, and you guys can do all of that here today, as long as it's on topic, right? I want to make sure we get through here in a timely fashion because we've got only 2 days to cover this stuff. So, first of all, how many of you guys prefer trend trading over reversal? Just put a T in the chat box if you're a trend trader or directional trader. I just want to know if you trade trends or directional momentum strategies, anything to do with try to be on the right side of the market, right? I think a lot of them, I know some of you might trade reversals, nothing wrong with that. But I just want to know where my trend traders are at, where all my directional traders are at. I just want to see who in here you do. Yeah, Gordon does both. Yeah. And if you do both, you can put both in here. That's totally fine, right? Breakouts, momentum. Yeah, that's directional. Yeah. Levels mostly, Daniel. Yeah. Both. Great. So I do need to cover a quick disclaimer, guys. The reason it's called 3 layers, 1 clear signal is I use 3 components to the system to be able to enter the trades. And that's really what we're going to be going over today. We're going to go over the 3 layers. We're going to talk about the signals, and then we're going to go into the charts. We're going to show you example. Yeah, we're going to go over we're going to be going over the charts. You're going to see a ton of examples. We're going to show you everything. Okay. So if you could do me a favor and just please take a look at this disclaimer. Regulators require us to have it here. I'm not here to give you advice or tell you what to do with your money. I'm not your CTA or your broker dealer or anything like that. If you could do me a favor, just remind yourself that past performance never guarantees future results. And please note that I can't guarantee anything other than my time, my information, and my resources, right? Can you guys please type a Y in the chat box that you accept the disclaimer? We can move forward like professionals. Yes? Thanks. All right, let's get into this. So these are on the left, I've got Tickblaze desktop, and on the right, I've got the Tickblaze web trader. Okay, Tickblaze web trader is just another, it's like another trading view, right? Like we have a trading view version of this. And so what I've done is I'm going to be going over some notes. Like this was a trade that just took place here on the NASDAQ on the 5-minute Heiken Ashi. This trade was this morning in the overnight. These are the 2 trades that happened here. I don't trade the chop in the overnight. I don't trade over here. But yesterday, last Friday, there was some big trades. There was a ton of big trades here. These are all signals from the trades. We're going to talk about them here as well. But you can see the power in these trades. Like that last green trade right here, that last signal was the actual trade that just fired off on that system. And so this one here is the signal here. This one down here is the signal here. These, I'm just going to grab a draw tool here and show you because we're going to go over the signal system in a minute. But what I want to do is I want to go on the web platform and I want to show you this on the web, and then we're going to go on the desktop. So here was the last signal that just fired off, and here was the signal in the overnight that fired off. Both of these were on the NASDAQ 5-minute. And but before we go into all these examples and we do all this stuff, I really just want to talk about why I would even trade this strategy. Like, I don't know if you guys know what goes on behind the scenes, but this is my testing doc. I'm going to show you 3 documents right now, okay? And this is a preamble to tomorrow's events. Just give me a second. You're going to show you a few things. I'm going to grab Jeff's, and then we're going to grab Berzin's. I'm going to show you something here, okay? This is pretty powerful stuff, what's taking place right now. And so we have a team. We have a team in the company, and if you look down the bottom, you're going to see just a whole bunch of strategies, just a whole bunch of trading systems, algos, and you'll see the HATT system is down in here. And I've been testing the HATT system extensively on the NASDAQ. We have other markets that we're testing. Like you can see, we're testing the Wicker, we're testing the CWAP, we're testing auto divergence. I haven't done auto divergence. Well, I've been doing volume divergence, the one and done. We just got so many different systems. Look at what Jeff's done over here. He's got the one and done. Like we've been testing systems, getting things ready for the HATT system and the Heiken, we got just strategies after strategies. We got just everything is coming together for, all of the different stuff that we've been doing, right? And so why am I showing you this? Because we don't trade anything that, like, I don't try to trade anything that I haven't really tested myself. I can't physically get behind a strategy that I haven't been able to identify the data. Like, I can look at it, I can see it, we could sell it, but if I'm going to personally trade a strategy, I need to test it. Like, I need to test it extensively, because there's no way in hell I'll put my money into the market if I do not believe that there's an actual edge or that there's alpha to be traded. Like, I just having the experience that I have, I'm not somebody that will just go and be emotionally looking to trade something because I need to trade, right? I need data. I need to believe it. I need to have it in my brain that it's actually working, that it actually makes a lot of money, and et cetera, right? So what we're going to do is we're going to just start with this. Okay, we'll go on the web for a second. And is this too big? Is this too wide? Is it too small? I'm using a widescreen monitor. I can make it a bit smaller like that. Would that be better like this? You guys tell me, is that a bit better? Yes, better. Yeah, it looks good like that. Okay, yeah. I just want to make sure. Yeah, it's better. Perfect. It's not so wide. It's not so small. Okay, great. So let's do that. Let's talk about the Heiken Ashi system. Let's just go into the foundation first, because it's really about the foundation. If you're going to do something, you got to understand it. But you're not going to buy a car without test driving. I guarantee everybody in here has never, you've just never just said, "Oh, I'm going to buy a car and not take it for a test drive," right? Like, so you need to understand something before you trade it. Okay. So the first component is I use EMAs, right? The purpose of the EMAs, and I'm going to share this with everybody. I'm going to open it to you guys, and you guys can have it here. Anyone with the link can have this. Okay, it's a viewer. Copy the link. I'm gonna put it in the chat. You guys get this. Don't you worry. Everybody gets it. It's free. It's for you guys to have it. You guys can use it, right? We're going to be going over these notes. This is the notes that I'm taking. You don't have to write them. I've made it super easy for you guys. Just enjoy the learning. So just sit back and pay attention to what I'm doing, and I'm going to get through this. Okay. So why do I use EMAs? Well, because EMAs are a really good way to identify directional bias, right? They smooth price. It keeps traders aligned with the momentum of the market. It filters out low probability counter trend trades, right? So if you are going to trade reversals, right, you can use EMAs to identify the direction and know whether you're with trend or not. And the reason I use exponential over simple is exponential is faster. It is a more responsive EMA than a simple moving average. Okay. And why is it better than many alternatives? Well, many traders rely on subjective trend lines. You could put support and resistance on your chart, but you're not everybody. If you put an EMA on your chart and everybody uses an EMA, it's the same, right? It's like you might draw a trend line where somebody else draws it differently. You might draw support and resistance where somebody else does it differently. So when you use an EMA, it removes the subjectivity of everybody doing it differently. Okay. So we don't want to be trading this, right? And there's two ways to trade this. We can trade this using just one time frame, or we can trade this using two time frame EMAs. And I'll explain what that means here. Yes, this is being recorded, and you will be able to go over this many times again. So don't you guys worry, okay? So the next thing is that when we decide to trade a pullback, right? I don't just trust any pullback. I want to use a tool that is designed to identify the right type of pullbacks. Does that mean every pullback is going to work? No, they're not meant to work. Every trade signal or every system is never meant to work every single time. There is never going to be a strategy in the history of your life and mine that will work 100% of the time. However, if you are going to do something, you should have a logical reason for doing something, right? So I like to use the RSI for this system. And the reason I like to use the RSI for this system is that it allows me to identify when the pullbacks should be traded, right? Versus when I think they should be traded, right? Because you might see something, oh, that's a pullback, and take a trade, and then all of a sudden that wasn't really the pullback, right? Like that wasn't really the right place. It helps avoid chasing extended moves, meaning you don't just try to chase a rolling market that's going crazy and you don't have a pullback to trade. It identifies where pullbacks are likely ending. So if you are in a pullback and you're on the right side of the market, you'll be able to identify why you should take a trade. And it adds confirmational momentum to your trends. So now what we've done is you're using trend. Okay. So we'll just put this as trend. Okay. And this is momentum. So we're now bringing two components together into the decision-making process. Why is this better than other alternatives? Most oscillators generate false signals because traders use them against the trend. Okay. When you use this with trend instead of a reversal tool, RSIs become more significantly reliable, right? You could use a CCI or a MFI or a stochastics, but the 90% of traders are going to use oscillators the wrong way. Most traders use oscillators for reversal trading. They're not supposed to be used for reversal trading. Most people think that they are supposed to use an RSI to identify overbought and oversold. You're supposed to be using an oscillator with trend to identify timing the market in combination to direction, not fading reversals. Because every single market, if I'm going to draw a trend, okay, and I got an indicator here, you're going to be overbought the whole freaking time. You know, you're not just because this goes to an oversold position, that doesn't mean the market's going to reverse, right? What I'm looking for is if the market's going like this, I want to see the oscillator come up and then hit this so that my pullback and oscillators are aligned for what I'm trying to do, so that I use the momentum in combination with the pullbacks, right? I do not want to use an oscillator the wrong way. Most traders use indicators the wrong way. As much as you might think you're doing it right, if you study there's a designation. You could go and be a CFA or a CPA, or if you want to be a chartered market technician to get your CMT designation, which I've looked at very heavily, okay, just being somebody that's been in the markets for 10 plus years. The part of the program that they teach you to understand to be a CMT is knowing how to use oscillators and indicators properly. And if you study that, you could use ChatGPT now, right? You could use other tools to get clarity on things. If you're confused about what you're doing now, you don't have to go and get a designation, but I'm just telling you that the right way to use an oscillator is to understand the way it was designed for. And most people don't even have a clue what the tools were designed to do. They just assume that it's overbought, oversold. Oh, that means I should be buying and selling. And that is where a lot of traders get stuck. And so when you build systems, like at my level of intellect in strategy development, I never pair things together that shouldn't be paired together. You don't bring the wrong tools together, right? You do not put a house up using glue, right? You use nails and screws. And so this is why we're going to be using these tools. Now, the problem isn't the indicators with most systems. Most people use the indicators wrong, but then the second problem that happens is traders don't enter properly, right? Traders do not enter the market. They don't have a reason to enter. They enter based off the indicators, which is the biggest problem. You should not enter based off the indicator. You should enter based off of a trigger, right? A certain bar type can be a trigger. A certain tool can be signaling a trigger. Certain things can happen for you to enter after the indicators line up, right? And so I've studied Renko bars, volume bars, tick bars, range bars, everything. And I've yet to see a better entry for this type of system than Heiken Ashi. Okay. Now, I don't know if anybody in here has ever traded with a Heiken Ashi bar. They're the only bar that modifies minute bars. So if you think about range or Renko, those are all volatility-based bars, right? You can grab a Renko bar and you can change the entries, the offsets, the reversals. You can manipulate volatility candles. You can get a range bar, you can get a full range bar, you can get pullback bars, you can get a lot of things for tick charts. But if you look for minute bars, Heiken Ashi operates off minute bars, which is a static variable. In fact, if you think about this, right? If you think about this, you've got tick charts, okay? You've got volume bars, okay? This is very, very important, so pay attention to this, okay? Tick bars, volume bars. You've got range bars, okay? You've got Renko bars, okay? You've got time charts, okay? Okay. The only variable out of all, these are the five most heavily used bars in the world. Like if you were to just sum it up, 95% of every single trader in the world is using one of these bars. Okay. The only one that is static is time. It's a static variable, which you may not understand. These are dynamic. These are non-static. We'll just call them non-static. Okay. Why is that important? Okay. So time is a predefined factor. Time can be measured. Time can be used universally across every single market. However, time charts don't really give really good signals. If you ask me, the bodies of every time chart don't really tell unless you master candlestick analysis and you can understand an engulfing bar, a pin bar, three crows, or whatever the hell you want to call them, right? He got all these. If you go and I think there's a guy out there, Neeson is his name, and Steve Neeson in candlestick analysis. You can go and study that. I don't have the time to learn 50 freaking patterns. I'm not interested in that. Like I don't have the time to do that. If I use a tick chart, well, then every single market is a complete chaos market because every market has a different defined ticks. You basically go in and, well, I don't know how many ticks are in the S&P and then the NASDAQ and the Russell and the YM. And then what about gold and what about crude? Volume and ticks are different for every one of those markets. Range and Renko, same things. The amount of time me and my team spend trying to figure out which bar should be used for each market. When we optimize systems and we're using Renko charts, we spend days just trying to figure out what's the freaking right Renko settings for each market because each market has different volatility, different behavior, etc. It becomes a nightmare for system mechanics. But if you take time, it's a static variable. And Heiken Ashi is a variable of time. And why is this important? Because Heiken Ashi bars are the only bar that modifies the open to smooth price like what Renko does for non-static variables. So when you start understanding why you use a Heiken Ashi, it's not just because it's a nice looking candle. Understand the purpose. Okay, Heiken Ashi is the only smoothing bar that modifies static variables in the industry. And so once you know this, you can use it properly for the context of entries. You can also use it to stay in a trade longer. You can use it to not get into a trade too soon, right? You can use it to basically be something a lot calmer when you're trading. Dan just said, I just started using Heiken Ashi bars 2 weeks ago. It's really helped me trade more decisive. Yes, Dan, you're absolutely right. It helps you make better decisions. So why is it powerful? It removes emotional decision making, which everybody in here suffers with. I know this because even myself, I'm human. It produces consistent entry and exits. Consistent entry and exits. Okay. Write this down. Consistency is important. And it keeps you in the trade longer when the trend is actually doing what it's supposed to do. A lot of traders get out too soon. They give back the profits or they don't even let a move run as long as they should. And they get in too soon. Standard candles often will operate and create emotional whipsaws. Heiken Ashi filters much of this noise. It allows you to get into the underlying trend at the right time. So knowing this, if you understand now why we use the EMAs, why we use the RSI, and then why we use the Heiken Ashi, now you're going to start to understand why we bring together this type of a strategy. So why this combination works. EMAs tell me, should I be buying or selling? This is the most important. That's your bias. Okay. So if you don't have a bias, you don't even you don't have a trade. Like you can't just, oh, I don't know if I'm buying or selling. Well, what are you doing? Right? Like if I was a food distributor and I go to a grocery store, If I have food on my truck, I know I'm selling the food, right? Like, but if you step into the market and you don't know if you should be buying or selling, you are in a dangerous position. Then you're now considered a gambler and you might as well just send me an email. I'll take your money because you don't need to worry. The market will take it, right? RSI answers is now a good time to enter. So this is about timing. So EMAs are your bias, RSI is your timing, Heiken Ashi is when do you execute. I will not enter a trade without the Heiken Ashi candle. It is the actual trigger for the entry. So does everybody kind of understand this, why we're going to use these? Now we're going to go, I've got another tab here for notes. We're going to be going through the notes periodically as we go into the charts, okay? But does everybody understand this at a base level? Give me a yes if that makes sense to you. Everybody understands that. Guys get it? Great. So there's two ways to do this, okay? And first of all, we don't use the RSIs on the standard settings, okay? If you're using a 14 period RSI, you ain't making much money. You're not going to get the good trade signals. You're not going to get it. It's not going to work, okay? Now, it's important to understand that when we optimize the strategy, okay, when we optimize the strategy, we only use one time frame. However, when I started trading this, okay, I actually like to use two time frames, okay? And what I will do, okay, is you need to understand the right variable if you're going to use two time frames, okay? So what are these variables? Well, let's go in and actually show you my fractal pairing document, okay? No problem, Kent. So take a screenshot of this. We're going to write this down. Let's just do this here for a second. I'm going to put this in the notes. Let's go over here, system summary. So we're going to go up here. So the HATT system workshop notes. The core philosophy is that the HATT system is built on three principles: trend, direction, RSI. And I actually don't ask one indicator to do everything for you. Each tool has its own job. Trend versus counter trend trades. Okay, so let's talk about this. This is very, very important. Trend trades are always the highest probability. Counter trend trades are allowed, but require a higher time frame. So write this down. This is critical. I'm going to write a note here. Only trade reversal setups if you are 100% using the higher time frame chart. Okay. If using smaller time frame only, trend only. This is a golden rule. Don't break this. You will lose a lot of money. Okay. Does everybody understand this? So if you're going to trade reversals, you must use, okay, you must use the higher time frame chart. Okay. So two charts. Okay. Higher time frame is your trend, lower time frame is entry. This is not necessarily true. I'm going to take this out of here and we're going to just do this instead. Like this. There we go. Okay. So when we look at the time frame structure, the first thing you want to ask yourself is what time frame do you want to enter on? So I'm here to tell you that I have physically tested this system on every single candle up to the 4-hour chart. And I've gone back as far as 3 years. And the strategy has been profitable for 3 years straight using trend trade signals. Okay. I have stats on it. This is literally stats. Like you can see here, this 15-minute did 1 million in profit, $300,000 drawdown, right? Trading 10 contracts over 4 months, over 6 months on the 5-minute. Like we were testing just different variable. I haven't finished my testing on all the other markets. It takes time to do all this testing, right? And so the long story is, to bring it back to you here, is that if I am going to be a day trader, I want to identify how many trades do I want. Now, my suggestion is that you don't do anything less than 5 minutes. Why? Well, you could get a lot of scalps, but you're going to get noise. Okay. So I would arguably trade this on a 5-minute, a 15-minute, and a 1 hour. These are my golden time frames right here. These are my favorite time frames. Okay. Right here. So if I'm entering on the hourly for the big kahunas, because I've taken some big trades on these, right? I use the daily as my higher time frame. And we'll talk about, you don't need to use special lines and stuff. We'll tell you what you got to do. If I want to trade the 15 minute is considered the big move of the day. So I want you to remember that as a day trader, you could get a couple trades in a day. If the market's really trending, you're going to get several trades on the 5 minute chart. But the 15 minute is going to give you the big move for the day. Okay. So if you're somebody that's like, I just want the big freaking move for the day every day, then you'll trade the 15 minute. If you're somebody that's say, I want a couple of day trades today, then trade the 5 minute. But if you're going to do that, remember that you can use just these time frames if you're trading trend only. But if you decide you want to trade the reversals, then you must use the higher time frame as a filter. Okay. So I'll give you an example. Okay. Let's do this. Give you an example. If I want to trade 5 minute trend, then I only need the 5 minute chart. Okay. If I also want to use the 5 minute counter trend, you must use the 1 hour higher time frame. Does this make sense? And so we're going to go and we're going to show you examples. I'm going to show you examples. I'm going to give you an example of what to do, how to do it, etc. Because why would you want to trade a reversal if you don't know what the big picture is? It's crazy. It's you're guessing at that time. You're guessing at best, right? And so let's talk about the indicator settings for a second because this is pretty important stuff. Okay. So for trend filters, okay, these are good if you're using multi-time frames. However, okay, I have been testing other variables and I haven't finished testing those other variables, but for the most part, I've basically found out that I also get good results with 10 and 50 or 15 and 100, and this is on the 15 minute. Okay. This is on the 5 minute. So this is on all. You could do this on all, right? And this can be all. It's not, there's no, what's really nice about the system is that it's basically, you could use pretty much any EMA comparisons on your charts and it's going to be fine. It's not really about getting the perfect EMA. What's really important is understanding the RSI setting. The EMAs are pretty simple to get right if you want to use a 10 and a 20, or if you want to use a 20 and a 50 or a 50 and 100. I'm sure you're going to get perfectly great signals, but where you're going to get really, really bad signals is if your RSI is out of whack. So what I'll tell you, there's a rule here. Okay. If I'm on the lower time frame, okay, I'm going to use a 3, 4, 5, 6, or 7. I will not go above a 7. And 7 is pushing it. I normally like to stay at a 5. So I'm just going to use a 5. I will go 3 or 4 or 5. For the higher time frame, I never, ever go more than 3. Never. Like if I'm on a 15 minute or an hourly or a daily, I will not use an RSI over 3. I've tested it. It works great, right? You're going to see over here, if I go to my testing notes, you'll see the RSI setting was a 7 and a 3. My 15-minute Heiken Ashi set was a 3 period RSI. And this is my back tests and my optimizations. And so this is really important because if you don't use the right signal settings for this, if you don't use the right, I guess you would say settings for the RSI, you're not going to get the right signals. And then the Heiken Ashi, you enter on the first Heiken Ashi that changes color back in the direction of the trend, right? So this is how we're going to start pairing the system. I'm going to start doing this on the charts. We're going to change some EMA settings together. We're going to change some RSI settings together, and you're going to see why we do this. And then you're gonna basically understand how to enter the trades. Now the trade rules, okay, so let's just bring this down a little bit. The trade rules are very simple. And you're seeing that I'm using higher time frame. If you're trading trends, you don't need to use a higher time frame. But if you use a higher time frame, you're just gonna reduce some of your trades, but you're gonna have better trades. It's really a choice. Some people get anxious and they want to take a lot more trades, and I get it. I get it. We're humans. We have emotions. We're really impatient creatures, and that's just naturally what we are. But if you're going to trade the long setups, you want to wait for EMAs to be bullish, whether you're using higher time frame, I'll just put or smaller time frame. EMAs are bullish, right? Which means they cross over in the bullish way. Everybody understands a bullish crossover, right? Your 20 crosses the 50 or your 50 crosses the 100. You guys get that. But you need to wait for the RSI to become oversold. Okay, must be oversold. And then you enter on the first bullish Heiken Ashi candle. Your stop goes below the swing or factor of ATR. And then you can target 1R multiple, preferably larger, or opposing levels. Okay, so let's just do this. I'm just going to copy that. I just do this. Bearish. And this is overbought. Enter on the first bearish Heiken Ashi candle. Stop above the swing. And there you go. It's really pretty straightforward, but it's the combination of the tools that make this pretty badass. Okay. Now, what I did when we tested this for years is I didn't test the stop loss on the swings. So like, I'll give you an example. Like, let's say this, right? Like we're trading down and there's the trend and you've got an oscillator here and you've got the candles going like this, right? Boom, boom, you get a pullback, right? And let's say your oscillator is going like this and then boom, it comes oversold, right? And you're overbought, you get a Heiken Ashi color there and everything works out and it goes like this, right? And it's starting to move in your favor. Sometimes the market will come up and sweep again and then drop down. Now, is the trade wrong? If you put your stop loss above the first swing and you got stopped out and then the move went again, you're going to see probably some divergence here, right? Normally happens. But if you enter the trade and you use ATR as a stop loss, you remove those things from happening. So instead of having your stop always at the high, the market can see the structure. And if the market wants to take that liquidity, rob the stop losses and say, oh, they stop hunted. Yeah, that's what they're doing. That's why when you see divergence on pullbacks, and I know divergence on pullbacks, I've taught trifecta lessons and stuff like this. It's one of the most powerful trades you can have is after you see the divergence and it breaks, you just get confirmation of the trend continuing. But here's the thing. If you use ATR as a stop loss, instead of the swing, you could use a factor of ATR. Your stop loss is normally over here instead of being so tight. And you don't get in the room of the swings and the stop grabs. And so I challenge you to understand that you can use ATR. And if you look at my testing notes, when I did my testing notes, okay, stop loss periods, stop loss ATR, 1 ATR, 2 ATR. On the 15-minute, I'm using a 2 ATR stop. And it's great. Just makes a shitload of money, right? Using a 15-period EMA and a 100-period EMA. You say, well, that's a weird combination. Well, that's the combination that makes the most money when I back tested it, right? So what I'm going to do here is we're going to get into this, and we're going to get into this, and we're going to go through this together. And we're going to look at that, right? So don't assume the setup failed. Very often, the first stop out creates market structure, forms a trend line, produces divergence, becomes a liquidity grab before the real move. Often, the second setup is the best trade. This is what I was just referring to. This is just in case you ever get stopped out, you can tell yourself, hey, this is just what happens. Now, for position sizing, okay, one of the things that you can do to avoid this is you can enter 50% on your first signal. You don't have to go in on the first all of your trade. Like let's say you're normally trading 5 or 4 micros, right? Maybe you trade 4 micros, right? Okay, so then market's going down, right? And let's do this again. Let's say the market's going down, push, 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 pulls back, right? You get the signal, okay? And it goes down like this, and then it comes up, boom, sweeps the stops, and then it drops. So you enter 50% here. You wait to see if it sweeps the high, and then you enter 50% here again, and then drop it again. You can do this, but you don't have to if you use an ATR stop. If you use an ATR stop, you're going to go in with your full position. And it's going to come down. Your stop loss is going to probably be a little further up here because you're using a volatility driven common sense stop loss placement, not structure. A lot of people always put their stops above the swings. And guess what? Everybody in the market can see the freaking swings, including the people that are trying to manipulate the markets to be able to get the liquidity it needs to move the market. Everybody says, oh, the stop run, they're after my stops. They're not after you. The market needs fuel to move. So don't take it personal if you get stopped out and the move kept going. The market didn't have enough juice to finish the trend. It needs the liquidity. So it's going to take the dumb money. And therefore, if you want to be smart money, you need to think differently than what everybody else does. Use volatility as a stop placement, not structure, because everybody can see the structure. And that's where everybody gets their stops smacked, right? How many of you guys have ever been stopped out and then the move just goes in the direction and you're like, what the frick? Right? That's why using volatility as a stop loss is going to give you better results. And so how do you do that? Put an ATR on your chart. Just drop an ATR down here. Drop an ATR on your chart. Right? You just go here, click on the indicators, grab ATR. It's not hard to do. It's right here, average to range. Bing, bang, boom. There it is. You just drag it down and just keep it here. Slowly on the bottom, you can see the ATR is 62 ticks. I think, I don't know if that's points. I think it's in ticks. Input 14 style. I don't know. In on the desktop. Yeah, it's in ticks. See that? It's in ticks. Yeah. So 63 ticks. You can figure that out if you're going to enter a trade, right? And you can get into the trade. So let's just do this for a second, right? Like let's just go back here for a second, right? EMAs are going up, pushing up, pushing up, pushing up, pushing up, right? And you get the pullback, okay? Here is the RSI. It hit the oversold position, okay? You can see the white candles. These are the pullback, right? So you can see that the market goes up, it starts pulling back. You don't enter as it starts pulling back. You don't do that. You don't enter on the EMA. You wait for the oversold position. Now you've got the first step, which is your bias, your second step, which is your oversold or overbought pin conditions, right? Step one is on the right side of the market. Step two is the oscillators now telling you you're in the right location for the pullback. And then you get in on that blue candle. Okay, you get in on that blue candle. And so essentially, let's take a look at where the long trend is. Long position, right? You enter as soon as that candle closes, you enter. Okay. And if you drew your stop loss, what's the stop loss? 63 ticks is, you can hear 63 ticks is one ATR, and you can maybe go 120. It's two ATR. You don't need to. You could do maybe 100, one and a half ATR. 60 and 30 is 90, right? So this is round up to 100, and that's one and a half ATR. You go all the way up. And it went all the way up to a good one and a half ATRs, right? That trend trade gave you 1.5 hour multiple before the market opened this morning. And this is the signal right there. That little blue candle, after that happened, after that direction was confirmed. It also happened here in the overnight. It also happened right here again. Right here, you can see this. EMA's crossed. Okay, so I'm on a 55.89. I'm going to switch this to a 10. There it is. And we're going to switch the big one to a 50. Like that. We're going to turn this to a 5. Make sure my settings are correct. It's a 7. I'm usually using a 5, but and watch this. If I change this to a 7, look at that trade didn't happen. Neither did this one. You see that? No bueno. I like to use a 5. I like to use a 5 period. I like it. I think it's responsive on the 5-minute. I've always used the 5 on the 5 period. So you can see here, trend changes here. You can see the bullish trend change happen right here. There's the crossover. The market pulls up, pulls back down, oversold condition. So this tells me we're at the right location, right? So step 1 is your bullish bias. Step 2 is your oversold. Step 3 is your first blue candle. You can come in here, and you can, what was your ATR at that point? Probably the same, but this one went all the way up to here. It was a 3R trade. If you held that trend, you didn't have to get out of that trend. You could have kept it going, right? So this is the difference between how you choose to manage the trade is your choice. And I know a lot of traders that will start taking some profits when we get over here. So you can start peeling off some trades, move to break even, wait for it to come back, and then take a little bit more. It's your choice. But the whole purpose of this is that if I was, now remember, multi-time frame fractal pairing, okay? If I'm on the 5-minute, which time frame should I be using for my higher time frame? The hourly. Why? Because I just showed you trend. These are trend trades, okay? But what about this trade right here that was awesome? That was an awesome trade. That was a reversal trade, wasn't it? Look at that. Trend is down, okay? So when I want to trade reversals, I use the higher time frame bias, right? So let's switch this to a 1-hour chart. So, and if I'm on the 1 hour, okay, the 1 hour is down. See this? The 1 hour is down. So if I'm using that, let's grab this, make sure I'm on the right side. Yeah, 15, 1 hour, 5. Yeah, perfect. So let's do this. If I know that the 1 hour is down right now, okay, then every single time, okay, I want to trade counter trend. Okay, I could be fading these reversals here. I just don't like to do it. I like to fade. And what I like to do, and I'll tell you what I like to do, is I like to trade reversals on bigger time frames because they tend to work a lot better. A reversal on a 5-minute chart is not a reversal. Okay, a 15-minute is, a 30-minute is, a 1 hour is. So I like to trade my day trades, right, using the 5-minute and the 15-minute. But if I'm going to trade reversals, I'm going to use the 15-minute or the hourly. Does that make sense? Right? Like that's the opportunity that like I don't want to be trading reversals on 5 minutes. Let's write that down as well. So if trading reversals, do this on the 15-minute or hourly only. 5-minute, the 5-minute and 15-minute are day trades only. Make sense? So I wouldn't trade reversals on a 5-minute because I don't trust them. They're not big enough, right? But if I go to here and I switch this to a 15-minute, okay, I switch this to a 15. Okay, you can see there was some pretty powerful trend trades here, but the oscillator didn't give it to me yet. And I would use a bigger. I will change my EMAs to be a little bit more responsive, but I would switch this to a 4-hour. Okay, and the 4-hour is down. So if the 4-hour is down, that means every single time I got oversold here and I wasn't in the direction of the trend, that was my short. This is going to be my short right now. Market just came up, swept the highs, divergence. The market's probably going to drop right now. You understand this? So we're going to go onto the desktop. We're going to do this like because the key here is that you can do this on any platform, right? You can do this on a trading view, you can do this on Tickblaze web, you can do this on any platform, right? But I got tired of doing it all manually because I like to make things better. I like to do things better, right? So knowing that, I built the software because that's what I like to do. I like to build software. I like to do things to make my life a lot easier. And so instead of me having to do everything, I just coded the signals, turned it into a signal generator. And we're going to take a second here. We've already been going now for an hour, right? We've been going from 6:30 to 7:30. It's time to refill the coffee. Everybody take a 5-minute break. The brain needs that. We need that, right? If we're going to do anything to absorb things, right? We take a 5-minute intermission. We're going to come back and we're going to spend all of the time on this chart. Does that make sense? Give me a yes if that makes sense. You guys good with that? Because this is a workshop. We've got an hour of continuous learning and we've got another hour to go. So we're going to take a little bit of a coffee refill break. Okay. And coffee break. And we'll be back in 5 minutes. Okay. And we're going to just take a second. We're going to do this. The rest of this is going to be done on the desktop with the signals. Fantastic. I'll be right back, traders. Going to fill the cup. And I suggest you guys do the same. Okay, everybody back. Type a Y in the chat box that I got your attention. You guys are here, ready to keep going. Want to make sure everybody's good to go. Fantastic. Okay, so a couple things. We built a tool that I think is pretty amazing because it allows me to not have to do anything anymore. I don't have to check. I don't have to look. I don't have to think. I don't have to do anything like this, right? And essentially, what it is it's a tool that identifies where all three of those conditions are met. So you'll see here that we just got a buy signal, right? And rightfully so. If you look at the EMA settings, what we did, and I'll just click on the arrow, okay? What we did was we built a tool. It's called the Heiken Ashi Trend Trader Indicator, right? And like I said, remember we told you that we have an algo for this, but we built an indicator for me and for anyone else that wants to use this because it's incredible. Like the setups are incredible. Like the money that it could be, like the money that I've seen this system make is probably one of the most profitable strategies I've ever seen in my career. Hence why I'm doing a 2-day workshop on it. And I mean, I'll just show you, like, just so you can understand, I've taken a ton of trades in this. Like I've been taking trades and recently just to show traders like that it's actually possible. Like I'll just show you this. So this couple trades here myself, and this was on the hourly, right? I entered here. You can see this was the uptrend. You can see the the two EMAs, the big EMAs are going up, right? And there was actually a trade set up here, right, on the hourly, right? You can see the oversold condition and good move, right? Then it pulled back again, an oversold position. This was the first blue candle. I wait for that to close, and I entered right away on the next candle and wrote it all the way up, right? Like this is the hourly time frame. That's big trades, right? Those are big trades, right? And so, I can show you a few other trades we took. So here was me just identifying the opportunities, right? When the market gave us that. And this is on a 2 minute. You could do this. You can do this as a scalper, right? You could do this if you wanted to put the 15-minute as your higher time frame. You want to go like a 1 and a 2 minute chart. Nothing wrong with that. If you're a scalper, you want to capture a whole bunch of small little trades, you can do that combination as well. Okay. You can basically take a look at this. This was a big short that I took on the 4 minute. Like I said, it works on every single time frame that you do this on because of the combination. The EMA's crossed down. Look at the EMA's crossed right here. The 4 minute pulled up, oversold condition, overbought, excuse me, right? Entered on the first white candle to close, dropped all the way down. Huge trades, big trades. And here's another trade example on the 4 minute. You can use the 5 minute, but here's a great example of the stop out that you would have had. So here's a great example of the market came up, it hit overbought 2 times. See this right here? The first white candle was here. So if you entered and you put your stop here, you would have got clipped. I didn't put my stop there, right? I had my stop up here. And so I shorted 10 contracts, right, which is one full mini. And I was using a trade copier for that, right? So that was basically me just demonstrating it on multiple accounts. And then I trailed my stop. You can see my stop loss here. This is me trailing it because just using a trailing stop, right? And that was the same system. I was just taking another image. Here's a great example of it going in multi-time frames. So this is a 1 minute and a 5 minute. This is the wrong combination. This should have been a 15-minute, but that's fine. EMA's crossed, pushed up, pulled back, got the oversold position, entered right here. What'd they do? They came up, they ran the stops. See them running the stops, and then they just kept going. And I took that all the way up because my stop loss was down here because I look at ATR. And so this is the thing of what we're going to do here. And take a look at this. This is a great trade on gold. This is on a 5 minute chart, right? And this is micros, right? And just, showing big size, right? We'll go into that. Darren, you talking about on the desktop? You talking about that on the desktop or on the web trader? So here's a great example. And see this, okay? Look at this. I'm entering on the 5 minute, And this is the hourly, and this is the daily. So I wouldn't be using this time frame, and I wouldn't be using this time frame. Entering on the 5 minute, I would be using, yes, I would. I'd be using the uh, the 5 minute. If you want to ever check the fractal pairing, using the 5 minute, you can use the 1 hour. So that's what I was doing here. I was using the 1 hour time frame. You can see the 1 hour time frame was up, right? And it pulled back, waited for the first blue candle to enter, right? I didn't enter here because these were like dojis. I don't like to enter on dojis. I like to enter when I have a first color. I want the first color. I need to see that the first color of the Heiken Ashi candle is working in my favor and moved up, right? So here's another example of it on a 2 minute, right? Market pushes open, right? And it pushed open. But you see here, we had a pullback here, we had a pullback here, but those weren't really pullbacks, were they? Like if you look, where was the oscillator? That's not a good pullback, right? And if you look at the way that this happened, oversold, EMAs are going up, entered on the first black candle to close, took a base hit for my first target, and I trailed my stop too tight. I could have rode that all the way up. I got clipped on my trailing stop. Like I said, it's not perfect, right? But that's just several different examples of this doing it manually. But I got tired of doing it manually. Like I don't like to do things manually if I can save myself a ton of time. So I built this, okay? And this is a great example of like, should we be going long or should we be going short? Should we be trading a trend right now or should we not? Well, it's kind of hard to tell if you're just looking at one chart. If you're just looking at one chart, sure, you could do things. Does that mean it's the right thing to do? We'll have to see, right? Because if you zoom out a bit, right, we've been going down pretty much, right? This is not an impulse leg. That's an impulse leg. That's an impulse leg on a higher time frame. That's a pullback on a higher time frame. Most likely this could be another big impulse down for all we know. We don't know that yet. So how do we keep ourselves on the right side of this? So first of all, let's talk about how to get Heiken Ashi candles on your chart. Okay. So don't use the drop down. Don't use this because the pre-configured settings are not probably accurate. When you use a Heiken Ashi, you must write this down. Switch to a Heiken Ashi bar. By nature, it'll be set to trade. Do not load trade. It'll lock up your computer. It will not work. Switch it to minute and then change the minutes, 5 minute, 15 minute, hourly, etc. Okay. Now I'm going to do an exercise here with you guys. Okay. We're going to do something here. So, and I'm going to tell you why I think we should be shorting this market and not buying this market. This is not just because those signals look, wow, that's a huge trade. Wow, that's a huge, yep, those are big trades. And they made a lot of money if you were trading those trades long. But why is that one not working so great? Well, I'll tell you, because I don't think that we should be trading long right now. I think that we should be looking at shorts. And we're going to take a look here in a second. Okay. And we're going to take a look here. And how do we know that? Let's add a second chart here. Okay. Let's go in and link these up. We're going to switch this to the hourly trend. Switch it to a Heiken Ashi candle. Switch it to a 60-minute. See how it goes to trade? Do not. You switch it to minutes or you're never going to load this. Never going to load that. Not on the NASDAQ. You'll be there for an hour, maybe two, right? Give it a big enough look back that you can get some decent days here. Okay. And do that first. We'll switch it. Okay. I'm going to switch this now to I have a template built. We're going to switch it up here for a second. Okay, so let's just do this for a second now. Okay, so this is an hourly downtrend, right? If I look at these EMAs, okay, we're going to take a look at these EMAs, the smaller, that's a 10 and a 50. We're going to go to a 30. I'm going to do like a 34 and a 55. Let's try that. Yeah, downtrends. So I'm not going to have any signals on here, but I'm just going to explain it to you. We don't even need to use the signals right now. We're going to turn them off. Show stripe, false. Show entry price, false. Yeah. So let's just put these back on for a second. I'll show you a second here. So don't worry so much about the signals right now because we're not trading this 60-minute chart signal. We're just using the trend as the dictator. So if the downtrend is here and you wanted to trade um, in the direction of this trend, do you understand that? You can make the trend a little bit more dynamic if you want. Like if you wanted to have a tighter EMA, you could do that. Like you could have like let's say a 20 period and a 50 period if you want. It doesn't really matter. Like it's just right. It's still in a downtrend. You see this? We're still in a downtrend on the hourly chart. Okay. And so knowing this, if we're in a downtrend on the hourly chart, okay, then technically any of the uptrending signals is counter trend, right? Now that doesn't mean you have to use multi-time frame, but if you look at the reversals, okay, if you just look at all of the reversals here, okay, this would have been a reversal signal here. We got to turn the EMAs in the right direction. Like we got to make the EMAs a little bit different. So let's just go here for a second because this signal is only set for trend trades. These are not set for reversal trades. So you would need to have your EMAs set. And I have, instead of using 2 time frames to make this harder for people, what we did was we just added a higher time frame signal component. You see this? And so what we wanted to do is we wanted to basically put it all in one chart instead of having 2. Now, traders may still want to use a higher time frame, but not have this as the signal. So let's remove this, right? And let's go in and just add EMAs here for a second. Okay, we'll just go in here. This one is the first one. Let's just put this to like 55, and this can be an 89. Some good old fib numbers. Just like that, right? So you've got a downtrend happening here, right? For the last couple of days. Well, if you knew that, look at this. So you see all these signals that happen with the trend. Like when you're going in a downtrend and you're in the right time frame, and look at the trend trades. Like these are big trades, huge trades on the right direction of, look at these. They just keep banging them out. Those are massive trades. You're on the right direction of the higher time frame. So you see here, say going long here, you don't take those trades. Why? You're going against the big picture. Make sense? You see why we don't have to take this signal if we know we're in a downtrend, which means you only take the shorts. Now you say, well, what about this? Okay, well, we're getting a pullback here on a higher time frame, and I get that, right? And this is a counter trend trade. But then look at this. You got a failed trade, you get a win. You get a failed trade. You don't trade here. Like this is the wrong time to be trade. This is the close of the market. This is not when anybody takes trades. Like we don't take trades here. This is not the right time to be trading, right? Right. But then you get over here and you start saying, okay, well, look at these longs here. Okay, they look good in nature, but it doesn't make sense if I know that my higher time frame is down. I won't be trading any longs today. I will wait for the market to do what it needs to do, switch back to a short bias, and then I will just be aggressively shorting the market. Does that make sense? And this is very, very, very important because signal systems can trick the mind. My strategy, and that I'm trying to teach this to you, is that use the higher time frame as your filter. Always use the higher time frame as your filter because then you never take the wrong trades. And it helps you be on the right side of the market, right? If I switch this to a 15 minute, Okay. Let's just do this for a second. If I switch this to a 15-minute, and then I switch these to the timing that I should be, which is a 15 and a 100 period. Okay. Now, you can take a look here. We don't trade at this time. Okay. We don't trade here at midnight. But look what just happened. Remember what I told you? That I think that this is going to be a big short. Remember, I told you they probably swept the highs off the opening push, grabbed that liquidity, and dropped it. And there's the first. Did I put 1,000? Okay. Thank you. Just making sure you guys are not sleeping. There we go. Okay. There it is. We're going to wait for this to switch. Okay. We'll wait for this to switch. I still think it's a short. I still think it's a big short. I still think we're going to cross down and we're going to have a huge short. But look at the shorts that came in here. Look at these shorts that came in here, right? From that big move. But you're going to be using the 4 hour. If you're going to be using the 15-minute chart, okay, if you're going to be using the 15-minute chart, you can use the 4 hour as the higher time frame. So you go in here, you take it back, you go 240, take a look at the 240 trend. Let's see what it is. Still in a downtrend. You're still in a downtrend on the 4 hour chart. So if you're going to, and here's the difference, okay? And I'm gonna explain why we didn't just do it on 2 time frames. Instead of looking at this higher time frame, okay? Watch what we did here now on this. So if I want to trade this, okay, and I want to trade this. So let's just give a few different. I can, instead of using a higher time frame, I can use the higher time frame filter. See this? I can use the higher time frame filter. So what I can do is, and you always want to make sure that your RSI down here is set to the same period here, right? You want to make sure that it's set to the same period there. So this is a 5 and that's a 5, right? Overbought and oversold is 70 and 30, 70 and 30, right? I don't use this. It's just an extra filter. It's not really that great of a, not really use it. But let's talk about this. So let's just put this to like I say, I don't know, like a 34 and a 89. I'm just using random numbers for a second. Yeah. Or we can even do it bigger. You can maybe do like an 89 and a 144. I'm just using just examples. Okay. Right. Now you can see, there you go. Okay. On the 15-minute chart, you can see you don't trade at the wrong times. Time of day is very important. So just because you get a couple signals here doesn't mean there's any, and there's nobody trading the market at this time. Right. But there's definitely people trading at this time. This is 3, right? Definitely people trading at this time, right? There's definitely people trading right now. And here is what I mean by the market give you the short. What did it do? It needs fuel, swept all the stops, and just gave the big short for the day. This market's dropping today, guys. This market's going down. And it's going to be a big short. It's probably going to come down and take that liquidity on the lows right here. And so why am I showing you this? No, and so this is if you're just using, say, 1 time frame. Like, so if you want to use 1 time frame, it's too laggy to use this type of an indicator setting for this. So what I will do is I will go back to basics and let's say to myself, self, higher time frame filter, smaller time frame filter, right? So if I'm going to trade using one chart, I don't need the higher time frame. I can engage the higher time frame EMAs. Do you see this? So I could put maybe a 100 period here and a 200 period here, and I can turn it on. Show the EMAs. I need to come back here and turn them on here. So let's just do this. Let's go the EMA plot 1. Let's just do red. There's many ways in which you can do this. I personally, I'll show you what I'm going to do next, and I'll tell you my sweet spot. Okay. Apply them. Okay. Give me a second here. So this, so if I wanted to maybe say put these to a much bigger EMA, okay, what we can do, let me explain this. Let me just show you how this works, okay? So you can come in here and you can turn off the smaller, so you can see the big EMAs. Those are the big EMAs. See that? That's the big period EMAs. Now you don't have to have you do not need to have the signals on for the big EMAs. So you can turn the, right? You can turn the signals off, right? And then you have the filters. You can still use the EMA, but the signals are off. You see this? Well, Chris, I'm going to tell you, I'll give you the signal systems. Yeah, there's not a false signal. I'll just give you the numbers. Like I said, we done the optimization so you don't have to. I'm going to tell you right now, the 15-minute chart uses a 15 and a 100, no higher time frame. The smaller time frame uses a 10 and a 50. We don't deviate. I'm trying to show you how to use the indicator and set it up in different ways, but I don't change these settings. I'm just showing you how to use the tool for a second. I will give you the exact settings so you don't have to worry about changing anything. We have them already pre-configured. I just want to show you how to use the tool so that you guys know how to manipulate things. If you want to play with the tool, if you want to use this, the system isn't just using these numbers, right? Does that make sense? So we're gonna get into that, and we're gonna show you exactly which ones I will be using and which ones I'll be trading, and et cetera, et cetera. But I want to show you how to set it up on one time frame so that you can have all of it on one time frame. Or what I like to do is I like to just disable the higher time frame, everything in here. Like I'll show you exactly what I like to do. I like to disable the higher time frame, turn off the higher time frame, which is what I had before. Okay, I like to do that. I like to leave the smaller time frame on. Okay, we're going to do that in a second. And then what we're going to do is we're going to come into the here and we're going to turn this off. We don't need the higher time frame. And then what I do is I just switch it to the right EMA settings, and I use a higher time frame chart. My preference is always use a higher time frame chart. I do not need to have it all on one time frame. If some traders don't like to use two time frames, I love using two time frames because it allows me to stay on the right side of the market. And if I'm going to be day trading, let's just go down to the 5-minute chart. If you want to be a day trader, come in here, switch this over. Okay. And then what I'll do is I will switch this right back to my time frame. Remember, everything is a systemized process. So I'll just put this to a 60-minute. And I will not be buying today. I would be a short seller. So I will turn this to the right numbers. The right numbers for me based off testing is a 10 and a 50 period for the 5-minute chart. So the MNQ is a 5-minute chart, right? Over the last 6 months, it made $500,000 and it had a $100,000 drawdown. Okay. And I'm using a 1 ATR stop size and my targets. And this is 8 a.m. Eastern to market close. The RSI 5, 6, and 7 works, right? But I'm going to give this to you here. So I'll put this to a 10 and a 50. And then that way you're not wondering what the hell we're going to do, right? There's no false signals. All right, put it here. So I would not be trading the long signals. I would be waiting now. The market just traded short. So right now, what I'd be doing as a trader, I would not be trading these long signals pre-market. I would not trade this long signal because I know I'm in a downtrend. I would be waiting now for shorts. So there is no need for any false signals. I always follow the directional plan, and it's in the notes. Like it says right here when I explained this, that if you're trading reversals, which you don't have to, right? And if you were trading reversals, right? Look at if you were trading reversals, right? This system's not designed for reversals. This system is designed for trend trading. Heiken Ashi trend trading system. Does that make sense? So let's ask you a couple questions. What direction is the higher time frame right now? Up or down? You guys tell me. Down. Should I be buying or selling this market? Selling. So there's no false signals. None of these were actually trades I would take. I would wait for the short. I'm going to wait for the oscillator to come back up now and give me the short, because it will happen. The market is now gone. We have now engaged into the right direction of the market with this time frame. So now as soon as the oscillator gets here, we are going to get a short signal and it'll give us the impulse move. That's it. You just wait for the signal. Now you could go down to a smaller time frame. Like I said, if you wanted to, Okay. If you want it to go down and scalp the market, 1 minute chart, 2 minute chart, I'll switch this, right, to a 15 minute, right? So I wait, come in here, I switch this to a 15 minute. Okay. And these EMAs are a bit, I would do this. I will switch this down to a 34 and a 55. Okay. And then what I would have done is I would have turned this down. This is scalping. Remember what we said? I have a table for this. Go to the table right here. Go to this table. Decide what you want to do. If you want to go back and add the others, I can copy this for you so you guys can use it, right? Right here. Let's just do that. Let's just put that here. I'll just show you this. I'm going to go here. I'll just put the full table so that you guys can choose if you do want to scalp a smaller time frame. Right there. So let's say I don't want to trade a 5 minute. I'm not getting enough trades because you're somebody that can't sit and wait. You need to be trading, right? If you're not patient, you're not somebody that's developed that patience and you feel like you need to be scalping, you could go to a 1 or a 2 minute chart, right? And then you can come down, switch this down to a 1 minute chart, right? Take a look at the signals. We'll go back here. Okay. So there they are. So if you wanted to, right, technically, higher time frame was up, right? 15 minutes up right here. You can see it crossed over here. Draw the line in the sand. You can see that. There's no false signals. You're going to get that there. And attached to all. So there it is. So there's the uptrend on the 15 minute. So you could have traded every single one of these longs all morning if you were trading pre-market, right? So you could have taken that long, right? These longs here worked extremely well. This long worked incredibly well this morning. This one was a stop out, right? This one worked incredibly well. Look at this huge freaking trade on the 1 minute time frame. If you're a scalper, then use the 15 and the 1 minute combination, right? This trade worked, but it's counter trend, right? Technically, the 15 minute is still up. Does this make sense? Yeah. Guys, I can't please everybody here, right? Like if you're a 1 minute's too volatile, then don't trade the 1 minute. Go to the 2 minute. You're somebody that wants to trade the 5 minute. You guys, I've given you the variables. I am not here to tell you you should be a 1 minute trader or a 5 minute trader. I'm just here to tell you that I've tested probably 200 trading systems in my life. And I have more data on this strategy than any other strategy that I've ever built in the history of my career. I've been able to go back years to show profitability, years. In fact, when we launch the AQS tomorrow, this is going to be one of the primary systems that's traded inside of that as an algo because we have so much data on this system and how it works and how the money is made. It's insane, right? But as a discretionary trader, the signal system is key. Now, truthfully, you don't need to use a higher time frame for this system to work. I use a higher time frame to reduce the trades that I take and only take the badass trades, like the badass trades. So a good example would be somebody that doesn't want to use a higher time frame chart. You'll just trade this 1 minute trend. You could have taken that short, dropped it, that short, gone long, and big trades for the day. These are big trades, right? You can go to a 2 minute. Take a look at how it looks, right? You can play with the tool, right? You can see that here. Give it a second, right? And you can see that even the 2 minute, I prefer the 2 minute, to be honest, over the 1 minute. It's cleaner trades, a little less false signals. And the reason I'm using the 10 and the 50 is not because I just chose it. I don't normally use a 10 EMA. It's because when I ran the optimizations using the algo, it just told me that it gave incredible results, right? Over 6 months of back tests, 150 trades, right? Here, right on the 15 minute, I was able to take 110 trades over 4 months, right? And I tested the hourly as well. And, it's just, I just find I don't trade the hourly as much. It's a swing trade, right? So for me, right, if I'm going to just trade as a scalper, I'm going to trade this chart, right? And this was a perfect example of this morning, right? There was three great trades. Why are these great trades? Because when you get into this, you're going to add the ATR on the chart for a variable. You can add it here. Just push it down to the very bottom. You only need to see this number. You don't need the indicator. You just need to see the number for your stop loss. So if let's say I came in here and I was trading any of these long signals this morning, right? If you're trading pre-market or maybe you're trading the European session, I don't know where you live, right? So I'll just give you an example, right? If I come in here and I grab my risk and reward tool and I get in on this trade right here, okay? So this is 19 ticks. That is in, let me just double check to make sure the ATR is not in, it's in points. So if I want to switch it to ticks, switch it to ticks. So 77 ticks. Okay. So one ATR is 77 ticks. So if I got in here, it's too tight for me. One ATR is too tight. I would always go 1.5 to 2 ATRs. So for me, I would go like 77 and that'd be 140 ticks right here. So that'd be two ATRs right here. That would be my stop loss for that trade. And if you look, the ATR has been, I picked up here, but in the morning during all of those setups, right, you're around 80, 70 to 80. It's the same. You get in here, long signal here, and 80 times 2 is 160. So you just bring it down to 160. You would have never gotten stopped out on any one of these trades if you understand volatility analysis. And here, you would have got in there, and that's a 1-to-1. This gave you all the way to 3-to-1 trade coming into the open. And then down here, take a look at this big short on the 2-minute chart. Okay, so if you come in here and you come in like this, okay, let's just do this for a second. Let's just grab the ATR. What's the ATR? 200 now at that point. Why is it 200 ticks? Well, because we're trading during the US session. So the market's going to be a lot faster, more movement, right? So we drag it around. And if you got there's your short, 200 ticks. So let's go like to 400 ticks. That's 2 times the ATR. You can do 350, which is 1.5 times the ATR. You can choose how you want your volatility on that. And there's the trade, right? So I know that people sometimes get confused when, oh, you need this time frame and that time frame. You don't need 2 time frames. The only way that 2 time frames make sense is if you're trying to reduce your trades and only trade in the direction of the big picture. But you need a lot of patience to do that, right? You need a lot of patience to be able to trade that. But I mean, I know a scalper is going to do great things on just 1 time frame using this type of a system. And what's really cool is that it's on a 5 period. If I switch this to a 7, let's take a look here. You would not have gotten that signal. I don't like to use 7. I like to use 5 on the intraday timeframes. Yeah. And it's a really, really clean system. So like I said, you don't necessarily need to use the higher time frame to trade this system. The key is making sure you understand how you want to trade it. And I like to use the variables here that I'm using, like the 10 and the 50, because I know that it works really well when I optimized it. So if you're somebody that's just looking for the best day trading signals, I would trade the 1, 2, or the 5-minute chart. So let's just write that as a summary, right? The best of the best for what I'm doing. So key takeaways. Okay. You day traders in here, scalpers and day traders, right? I would do the 2-minute or 5-minute chart, right? 10, 50 EMAs, right? 5 RSI. I've just given you the keys to the compass. You want to do this on gold, doesn't change a thing. Just switch the market. Like literally, let's just go to the market. Like I don't know the extent of this, but look, we're already coming up here. You just got to make sure that the software is set to the same RSI periods as your indicator. That's all you need to do. Like if you have a RSI indicator on your chart, Just make sure that it's set to the same. So take a look. We just came up. And we just came all the way up here. We're now at the right location, are we not? So I would wait for another white candle. We'll get another short signal. We take that trade down. You guys understand that? And we can do this on the Russell. Take a look at the RTY. Take a look at how it looks. We'll see. I haven't looked at any of them today. There it is. So you would have had a clean short here before it crossed over. Like I said, if you don't know what the higher time frame is, you don't really know, should I be going long or short with aggression or not? But if you just want to scalp the smaller time frame, right, you can see here, this was the market open. The market opened at 630 here. So this was the first short at 634. The EMAs hadn't crossed bullish yet. They were still bearish at the time that candle closed. There was your short all the way down. We're going to get another short here right away as well on the yeah. So it really is about understanding the time frames you want to trade, right? And if I go to, let's say, let's just switch this to a 5-minute on the RTY. I don't know if you guys trade the RTY that much, right? Right, but you'll see here we haven't had a trade yet. There hasn't been a reason to take a trade yet. Unless you make the EMAs, right? This EMA maybe a little faster, right? You know, if you take a look at, you see this, how it crossed up here. Well, if you made this a little bit bigger, right? You can do that. And you'll see a signal here, a big signal. All depends on your EMA settings and your direction, right? And you're going to get false signals here. Do not trade inside of the close of the market. That's just bad news, right? But if you look at the NASDAQ, I just think the NASDAQ, like I have stats owning a prop firm, all of our traders trade the NASDAQ. Like 90% of the traders trade in the MNQ. Like so it's like I like to show the examples on the MNQ because, you know, I mean, for me, right, it's the market everybody's trading, but it's a great time frame. The 5 minutes a great time frame, right? And this to me is going down because we're still in a 1 hour higher time frame, right? We're still in, and you can actually leave it like this. Personally, here's my suggestion. I just would leave the higher time frame off. It gets to be too noisy. Just use the smaller time frame and then apply some really big EMAs on your chart. If you really want to stay on the right direction of, hey, where's this market really heading? Right? I would come in here, maybe put like some really big EMAs if you choose to do that, right? And just put EMAs on the chart. You don't need to use a higher time frame chart if you want to. You can just do that as well. I'll show you this here. This may be like a 200 and a 300 period. I'll just show you. This is to give you the big picture direction, right? And then you can take a look and see if you choose that, or you can just use the one time frame. Like when we run the algo, we don't use two time frames. We just run one time frame. And the reason for that is the algo doesn't have the higher time frame filtering that I'm talking about. But the point of what I'm doing is showing you there's a few different ways in which you can set this up to avoid trading certain directions, right? And if you look, what's happening on this, right? The whole time, those bigger EMAs are down. Like they're still flat right now. So when these bigger EMAs are flat, right? And if you did a 100 and a 200, like let's say I switch this to a 100 period or a 144, which is like a lot of fib number traders do this, 144 and 233, right? Just do that. Let's just try that, right? So technically, if you were looking at the higher time frame trend, this just crossed bullish this morning. So you would have taken that long signal. And you would have also taken this long signal here. Okay. And this is divergence coming in here. But like I said, it's an hourly downtrend. So I don't like to just use EMAs to tell me where the trend is. I like to personally use higher time frame charts. I like to see the direction of the bigger picture. Does this make sense? So it's a choice. I just know that when we run the tests on the system, it works really, really well with these variables. Like the settings that I have now are the 10 and the 50. If I'm using the 15-minute, I will use the 15 and the 100 period. And I'll only use one time frame, right? So here, trend is crossed down. I will be waiting for this to come up on the 5-minute right here. I will wait for it to get here, and then I will get the white candle and it'll short. And we should see a really decent short there because the hourly is in a downtrend, right? And that's why I tell traders don't disregard the direction of the other time frame. I still think it's just good for a compass. It's just good to identify, right? What is the direction of the other time frame, right? And you don't even need to use Heiken Ashi for the other time frame because I'm only using Heiken Ashi for the right. I'm only using Heiken Ashi for the other signals, right? And you can see this as the market's down, right? Now the market's pushing some, trying to do an uptrend here, but it's not really like really strong conviction, right? Like we're still pushing pretty strong sell-offs here. So that's why I still think buying here is aggressive, but it also is a valid signal, right? So if you think about where your stop loss should go, if I got long here and the stop loss, it's very volatile right now. It's very, very volatile. So if I'm 345 points, okay, ticks, 345 ticks, if I grab my risk and reward tool, I get in here at 300. What's 2 times 300? That's a 600 tick stop. Your stop loss should be right here. And if it crosses back up, it's not an invalid trade. Do you understand that? These EMAs were up at that time. And if your stop loss is in the right location, you don't get kicked out. That's a stop run, right? Does this make sense to you guys, traders? You guys understanding this? I need to make sure you guys are understanding this. This is the whole point of the lesson. This is the reason I'm doing this workshop is I'm trying to ensure you understand the tools and understand. Type a yes if you understand everything that I'm teaching you right now. You love it? Yeah, it's good. Yes. So I'm just going to do this. I'm just going to put a 34 and a 55 period on the charts here. I just want to see something first. I'm going to show you a few things. So, all right, boom, boom, and this is boom, boom. Yeah, it's still down. Still down. So even if you are trading long here, okay, even if you are trading long, okay, it's counter trend, big picture. Doesn't mean you can't. It just means you need to understand the narrative, right? And truthfully, there's a better chance of this dropping than this ripping to the upside. Does that make sense? Like you can see the higher time frame is down, big time down. So yeah, okay, it looks good in temporarily. Oh yeah, we got some divergence. Okay, but pay attention to what's going on here is what you need to be doing. This market's not bullish right now. This market is not a buyer's market. So if you're using a 5-minute, right, you can use the hourly for anything less than 5 minutes if you choose to. Like, there's nothing wrong with using the hourly and going in with the 2-minute chart and taking the shorts. Does this make sense? Like, there's nothing wrong. Like, that short is with the big picture. We're going to get another trade here if this closes down. You understand that? So if that closes down, right, at an oversold condition, overbought condition, excuse me, then we know the direction. And it's a 185 tick stop. So let's just round it up to 200, which would be a 400 tick stop right there. So if I got short right here, I would put my stop right there. It's like this. So we're going to wait because I still think there's a chance that this could go short. And if not, then we're in a really, really rough grind. Ed says, you haven't mentioned using flat tops and bottoms on the Heiken Ashi bars. Yeah, I don't like, you mean like just the way the wicks are, or I'm not sure I understand your question, Ed, because the only thing I use the Heiken Ashi bars for is for my entry. I don't use it for anything about anything other than my entry. Makes sense? So right now I'm waiting to see if we get Stag says, when you explain it, it seems so simple. It really is. That's why I love it so much. And it's why I've been trading this so much. It's been such an amazing strategy for me. It makes a lot of money. It's very easy. And I coded the signal system. It's a really inexpensive tool, guys. Like we put it on the marketplace and let me grab it. Like it's here. It's a tool that's available. Let me just grab it here. Uh, we have it as a tool. Let me show you this. Yeah, so these are all, so let me explain it. If you go to Tickblaze, I think they've put it in here already. Let's see, the marketplace, Tickblaze. Let's just check it out. Mm, let's see, here it is. Got the product link. I don't know if it's in the marketplace yet. No, they haven't put it on the marketplace. The HATT Signal System Indicator. Let's go back and see if the HATT minimum indicators, HATT. No, they haven't put it in the marketplace yet. So it's not there yet, but it is here. So it's literally super cheap. Like it's not, this isn't some really expensive piece of software. It's a really inexpensive tool that, in my opinion, is just it's under trend. I'm not sure where that means. Yeah. Yeah. I don't know. I'm not going to waste time looking for it, but I know here that let me just grab the PowerPoint for you. Um, that it's very simple. So we built it. It's a complete trading system. It uses multi-time frames. Normally the indicators are around $1,000 for signal systems and for everything that we do. Here, let me grab this. See that? And I think they have it as a big special right now because we're doing the workshop. It's $495. I'll drop the link in here if you guys want to take this because it's super easy. Like it's super, super clean to trade. It's super easy to use it. And that's so you don't have to do it all manually, right? Now, if this decides to push back up, right? If this decides to push back up and go long again, well, then the market's just in a rotating market. And then essentially you guys can get the picture of, you know what I mean? It's if it decides to switch back and go bullish, well, then there won't be a short here, right? Like it's that simple, right? And if I'm using the 2 minute, you can go down to the 30-minute chart and see, the direction. And I think we're in a transition. I think that the buyers are trying to find their ground in this. I think that the sellers have been controlling this market a lot. But if you look at what's happening, these EMAs are converging and we're going into a sideways consolidation where I think the buyers are trying to gain their strength here, which is why that long on the 5 minute had a hard time. But I do believe that, like, if you look at structure, up, higher, higher, high, push, 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 made a higher high. Buyers are trying to come back in. Just because the EMAs are down doesn't mean that it's going to be a downtrend forever, right? So that's why I think that if you are going to look at trading, you can see that these were with structure here, right? And you don't need to use EMAs for the higher time frame. You could use structure and identify structure. I mean, structure is just as good as EMAs for higher time frame filtering, right? Yeah, you can use swing points, but there's an indicator inside the platform that's free, and you can go into the indicators here and you can get let's go to swing structure. Yeah, just make it a bit bigger. And we'll just increase the swing strength to like say 3 or 4. You can see it, right? You can do maybe a bit bigger 5, and yeah, you can see that that's the bigger structure. So you can actually see the structure changed here, and it's made consecutive higher highs, higher high here, higher high there. So I do think that they're getting support on that EMA, and there's a chance that that was the last short for this run, and it's very well. If you look at the 5 minute chart, right? If you look at the 5 minute chart, the long is holding right now. But like I said, it's hard when the EMAs are there. The only time trend traders have a hard time is when the market's transitioning. For a long time, the actual EMAs are normally in alignment with most time frames, right? And so, like by definition, if we're realistically just trying to follow everything by the rules, right? We're still technically in a downtrend with the EMAs. Now, these EMAs are smaller, right? So realistically, if you were to have bigger EMAs on your chart, right? Like instead of a 34 and a 55, and you had, let's say, a 55 or an 89 and a 144, which is a big picture EMAs, this market's still in a very big downtrend. It's just, what I mean? It's like this, even though we're zigzagging up, it's still in a very big downtrend. And I think that this is where you're going to get a short right here. And there is an opportunity considering that, I don't use structure that much. I like to use the EMAs and I like to stay with the way I do it. And, you know what I mean? If we get a short here, it's a short. We just came into 30 minutes supply, just came and touched that supply zone. If you switch this to a 60-minute, you'll see the same thing. It's still in a very big downtrend. So that's why I still think this market's bearish today. I've been bearish, right? Donald, I'm sorry that you're experiencing that, my friend. Please send an email in immediately and let them know that I told you to, and I'll make sure that they look at it immediately. I know they're putting out a new build today that's fixed all these problems. Anybody that had any problems closing trades or having copier issues or anything to do with like positions not closing or something like that, we rebuilt the broker adapters for the last 2 weeks. So everything is going to be pretty much fixed moving forward. We brought in different developers to fix those problems, and so they should be yeah, pretty much done. Yeah, if anybody in here isn't waiting for that fix, it's yeah, you should be good to go. It'll be fixed quickly. Yep. Okay, yeah, Melissa's the best. She's one of the lead support. Like I said, if you're going to use the tools, right, you got to just decide how are you going to trade. Let me put the link in here if you guys are interested in this indicator system. I think it's just incredible. The stats on this are bizarre. Like I can show you. Let me just show you. Like, let me just show you this. Yeah, let's just grab the 5 minute and the 15 minute. And that's these two. I'm gonna run a back test. Right how fast those back tests are. Yeah. So if you look here, I'm just going to refresh the 5 minute. That's been the 5 minute. And that's since January. Like January is terrible. Like nobody trades like the first couple weeks of January because of the holidays and everything. But this has been um, just consistent, like super consistent. And if you look at the 15 minute, refresh that. This is the wrong EMAs. I was still using the other EMAs. But like I said, I went back. I'm still testing this, mind you guys. Like it's you can see the tests that I'm doing, MNQ and all that stuff. Let's grab if you were going back since, I'm going to grab this, reset the desktop. I'll show you guys what we did. Yeah, so like February 25th or like March 1st, it was pretty crazy good. It's just the last couple months we were great. Yeah, it was just steady. It's just steady. You may get a couple losing days here and there, but this is a portfolio. This is not just one time frame, right? So, but these are not finished. Yeah, we're still in the testing. We're doing very good testings for we're doing big testing for the algo community, right? That's why I said I write my stats down, and I like to write my testing down because every person on the testing team, we have three algo testers, so everybody's responsible for different algos and different strategies, right? So we're doing different tests. Mine is the HATT, and I've been doing these two. This has been my favorite. So my favorite's been the 15 minute and the 5 minute. So if you just look at my bread and butter trade, like if I'm a trader and I'm looking for the big trade for the day, not so much looking at the higher time frame, but I will go to the 15 minute time frame and I will show you this. Take a look at this. We'll take a look at this for a second. And we're going to switch the EMAs. Yeah, the 15 minute just gave the big signal. So 10, 15, and let's see, 100. Let's just see if that's still valid. Yeah, we just got the big trade for the day. It's going along now. So that's the big trade for the day. So this is going to be a big trade. So this is mine. So if you say, hey, what do you do, Sean? Because you've told me a lot today. I trade the big trades. I like the big moves. I want to catch the big leg for the day. And today this is the big leg for the day. So we just came down. This is my signal. And I only trade this. I only trade this between 8:30 and market close. And so we just had this. So I would be taking 400. I would go in here for risk reward, take that trade, and we can put that there. Let's go in here and yeah, we can go 3 contracts. Just buy bid. So this is the big trade for the day, going long. And so I would ride this till the end of the day. Like I would give it all the way to the highs. And like I said, this is the 15-minute trade. And why do I do that? Well, because I know that this strategy, I've tested the 15-minute with no hesitation. Like I I have so much data on the time frames that I trust. And I use the 15 and the 100 period EMA, and I'm only going to market close, so 8 a.m. to market close. And I'm using a 3 period RSI, so I would switch this to a 3 period. And I would switch this to a 3 period. Mhm. Now I wouldn't trade these shorts because that's not the time I test. That's not the time I trade, right? Go in with one more. Okay, it's gonna load in with one full size mini. And so that's the market. Now 400, right? So technically I would be at like an 800 tick stop. That would be my stop right here, right? So, and this is the 15-minute signal. Like this is a big trade. So I expect this, it could move up and down for a while, but I expect this to give me a pretty good return because I have the data that tells me that. Now that doesn't mean it's going to hit a target or not. You don't, these are, like, if you take a look at this, like this, would you trade? Would you trade that signal right going into the Asian session? No. Yeah, so for me, I'm just going off of the algo testing. The algo testing doesn't use a higher time frame sharpshooter; it just uses a one time frame. So I use the 5 and the 15, right? Like I get you could have some great trades on a 2 minute and a 1 minute, but I'm looking at the banks. I like to look at what the big banks are doing and the big moves. And once you get through the noise and the bullshit's over, the market gives you the signal for the day, and that was just it right there. So I have no doubt in my mind this should give me a good move because I've tested this. I tested the 15 minute over a 3 year period, and it just works. Like it just works like crazy. So if you're looking for to remove the noise and just get the big move for the day, like I said, if I'm looking for the big move of the day, I'm going to use the 15-minute chart. If I'm looking for the day trades, then I will take the 5 minute, right? But I mean, even if we did it on the 5 minute, let's just go back and just put the 5 minute here and to show you. Give me a second here, guys. If you were trading the 5 and the 15, this is my workspace that I would use. Okay, so the 5 and the 15, and I would set this to, you can, let's take this off here for a second. I'm going to put the HATT signal system on. At 5, where are you? So technically, I would have taken that long on the 5 minute, and I'm gonna put the ATR on here. Both of them are long. So if you're not using the higher time frame, like I said, you don't need to use the higher time frame, guys. You just have to understand the right EMA settings. And so what I do is average to range. Put it to ticks. There you go. And I just move it down. And so, like I said, if you were trading the 5 minute, you would still be, you would have taken some heat because the 5 minute made you sit that one through a bit. But it, yeah. And you can switch this to the same. Like you could put it to like a 15 minute and a 100 if you choose, just like that. And you would have had two signals here. And technically, I would set the right here 15 to 100, and the RSI would be a 5. Yes, that's set up correctly. So there was two trades on the 5 minute. These are my go-to time frames. So don't, yeah, okay, I can take a little heat right now. I'm not worried about that trade. This trade will give me a profitable target. Yeah. So you'll see here that I use the 15 minute and the 100 extensively. Like it's my two go-to EMAs. So what I do is like if I want to scalp the 5 minute trades, you'd see here there was a trade here. There was also a trade right here. So this is so now that I've taught you everything that could be, and I've given you all the variables, and I've given you all the different scenarios and all that yada yada yada. Let's just get down to how I traded. This is what I do. I have a 5 minute chart and I have a 15 minute chart. And I use a 15 minute EMA, and I use just because I'm testing the algos doesn't mean I'm just doing this. I'm still testing algos. So like until I have all the data, I'm not going to use all this. I'm going to do what I've been doing extensively. And what I've been doing extensively has been using these EMAs like this, the 5 and the 15, or the 15 and the 100. If I was using the 5 minute, I would have taken these last four trades in the overnight. This was the European session. That was the that was the Euro Open. That was the pre-market. Big rip up, base hit, still moving in direction, right? So for me, because I know that I took the signal on the 15 minute, I expect this to take a long time. This is a big trade. So I will hold this into the probably the afternoon, right? And now whatever happens, happens. I just have the data that shows me this, right? So I will wait and I will be patient, right? Does that make sense, traders? Did you guys learn something from all of this? Yes. Yeah, this market's going higher, guys. This market's going higher for the like we just had divergence off the 5 minute in an uptrend, right? We're pulling back on the 15 minute. Just takes time for them to add their orders. It takes time for the market to build positions to be able to push. So when you get a couple $100 drawdown on a you're trading a full mini, I mean, this is a big trade on the NASDAQ. That's a big trade on the NASDAQ, right? But I think they're coming up here, right? And so, for me personally, um, yeah. So, like I said, it really depends on your. It's hard for me to say you should trade a 1 minute, a 2 minute, a 5 minute, a 15 minute, an hourly. Like I could put this on an hourly chart, and you'll be blown away by how clean the signals are. Yeah. No economic data. There's nothing here, right? So it's 8:40 in the morning for me, right? So we're going into the European close right now. So the big move will happen now after the European closes. You'll flush out that overlap, and then the rest of the Nasdaq will have its move for the stock market today, right? So for me personally, like I believe wholeheartedly in these two timeframes because I've traded these for the last several months very profitably. Like I have no confusion, right? And you know but I don't trade in times where I don't find lots of volume. Like I none of these signals, like none of these matter to me because none of this is where the data is. I trade 8 o'clock in the morning to close. So if you look at the 5 minute chart, look at these trades. That was Friday. Look at the day before. Look at how clean those trades are, right? Look even here, base hit for zero point 0.5. This is with a 1 to 1, right? I don't trade going into the close. I trade here. I trade these. This is where the banks are trading. Pre-market, this is the market open right here. I trade these setups. So I don't trade the system when you shouldn't be trading. I trade the system when the banks are trading. This is the NASDAQ. The NASDAQ is a stock market index. The stock market opens at 9:30 a.m. Eastern. You want to trade the stock market pre-market, you're gambling. You want to trade the stock market post-market, you're gambling. Trade the stock market at the time the stock market is moving. It's tracking 100 NASDAQ stocks. Those stocks move during prime hours. So trade the system during prime hours, right? It's important. It's important to understand the narrative, right? If you're like me and you don't want to have to do all this manually, you can just use the indicators, right? It's in the chat box. We're not doing a big launch for this. This is my strategy. This is a sexy system. I have years of data on this. I think it's more profitable than 95% of the systems I've ever built. That's why I've been trading it a lot. The reason I say that is because I have years of data. I don't have years of data on any other strategy. The only two strategies that I have years of data on are the opening range and this, because they're using minute time frames. So for me, it's not that any of the other systems are not good. I got a lot of great strategies. But like if you were to give me $1 million tomorrow, I would choose this system over the other strategies. I would trade this because I know what it does. I know it works. I know how it works. And like I said, if you're a 5 minute kind of person, you could have taken both of these 5 minute trades right here on this trade right here, or even right here. You'd be sitting in pretty good profit. I chose to use the 15-minute signal as my entry. Either one of them is going to give me a profit. I have absolute confidence this trade is hitting targets just because I know the efficacy of the strategy. I know how well it trades. And the reason I went into all the use a higher time frame and this and that is because sometimes traders aren't really, you're not as experienced as me. It's not that I'm better than you. It's just like I just know that a lot of traders struggle with bias. I know a lot of traders struggle with direction, right? But if you use one time frame or two time frames, you can choose how you want to trade it, right? Does that make sense to you guys? You guys have any questions on this? You guys have any questions on this? Do you have a high volume candle marker for like 100% of the time period ever? I do not, Gordon. I do not have that. No. Works on any market. It works on any. I could bring this on Bitcoin. I could put this on Forex. I've tested this on every single market in the industry. It works incredible. Why? Because it's time-based charts that are using Heiken Ashi for the trigger. No, I just wait for the first candle to give me the signal and I enter wherever the market's trading. I don't wait for it to pull back. I don't do anything because I don't know what the market's going to do. It could just keep ripping up, right? I see you have no objective. What does that mean, Donald Kaser? Can you review the yellow line and what the percentages mean? Yeah, so the yellow line is the ATR. So this tells me the volatility. This is the volatility of the market. Yeah, I'm just still teaching. I'm going to target the highs. Yeah, I will target these highs. That's the market has to go to get liquidity. So I will target the highs. As a trend trader, we expect pullbacks to continue to take out the highs. If I get all the way up here and I get a white candle, and depending on where I am here, then I will wait, right? So it's you can see here the market can go pretty high, even though it gets here. Like the market, look at this. The market can move all the way up. If it gets up here, just because it gets up here doesn't mean it's not going to go up, 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 up. Yeah, so that's what I taught in the last lesson, Benjamin. So Dan Benjamin's asking timing the HATT system with liquidity sweeps. 100%, right? Like 100%. Like I see that. That's why we use that as the entries. I use Heiken Ashi bars for the entries on liquidity sweeps, 100%. Mhm. Now, like I said, the 5 minute chart, if you enter here, you'd be sitting in profit already, right? But because I got a 15-minute signal here, right? You don't get a lot of 15-minute signals because 15 minutes is a big bar. You don't get a lot of hourly. So the market's got to move. It's got to do its thing, right? So we could get a pullback here. And you can wait for pullbacks to enter if you get the signal. If you choose to get the signal and you wait for a pullback, there's nothing wrong with that. This works well with everything. That's the thing. Like this strategy works well with that. You can put support and resistance on your charts. You can do whatever you choose to. I just want to do a test here for a second. I need to see something here. I'm going to tell you what the market did off the open. MNQ. I'm going to do a test here for a second. 1 second. I need the daily time frame. I need 100 days on this. Give me a second. I just want to see what they did off the open. I'm going to see what's going to happen here. 1 second. Bear with me, Yogi. I'm going to do something. I need to test something. What's the ATR? What's the ATR? Okay, so this is ticks. Let's put this to ticks. 2,500 ticks. 2,500 ticks. Okay, so let's go down now to the 15-minute chart. 2,500. I just need to see something for a second. Okay, so I just need to see something here. So I'm going to calculate this, guys. I just want to check the opening range here for a second. It's the opening range. I was going to see here for a second what their size of this is. How many ticks is that? And it's, oh, clicked on the wrong chart. A second. I just need to see that. That's okay. So it's 2,500 and that's 640. I know I'm doing something here just to tell you guys something. I'll explain what I'm doing in a second. So 2,500 times 0.20 is 500. So that was a manipulation bar. Okay. Yeah, they flushed on purpose. I have something else I'm going to be teaching you guys in a short period of time, and it's actually an incredible trading system too. I have a few things that I've been working on behind the scenes that is just going to blow you away. Like on the opening range, it's just incredible what it can do. And I'm going to teach it to you guys. Don't worry, we're going to teach you all the tricks. And yeah, that was the entry right here for that. So I have a strategy that I'm working on that I'll teach you guys in the near future that explains the opening 15-minute manipulation of the institutions. It's pretty incredible, to be truly honest with you. I've been studying it for a long time, and basically, I have a mathematical calculation that I can determine with a very, very high degree of accuracy if the 15-minute candle of the open is a manipulation probe or not. And it has a lot to do with the ATR of that candle. It has a lot to do with just the manipulation. But do you notice how the first 15-minute candle probed up? This is an up candle. It pushed all the way up. And then all of a sudden, they just swept it and then they tanked it. You see that? Do you notice how they pushed it up and then woof, huge short to the bottom, right? Now they're coming back and reclaiming it, and they're probably going to come back up in the other strategy. But there's a mathematical way to determine if that short is going to happen, if the opening range is going to fail. I've been studying the opening range for probably a couple of years now. And I have a mentor of mine that actually taught me how to apply mathematical variables to the opening 15-minute range and to determine if it's a manipulation candle by the institutions. And I'm actually going to build a tool that's going to tell us whether we should be doing continuations or we should actually be probing for a huge short or a huge long. And once they close back inside of this with a 15-minute candle, there should be a really good chance for us to get back up to the highs, which is why I'm long here on the other system. But I'm a stats major, so I go into the math I try to bring math into the markets. I try not to just rely on just random information, but like I said, there's a way for us to do things, and I'm going to teach it to you. Like I said, I'm going to teach it to you guys, and it's going to be amazing. And like I said, I'm coming out. I'm going to be working on a lot of content for you guys, and I'm going to be giving you guys a lot of value. And I know Jim's working on the Friday classes. Anybody go to the free class with Jim? He ran it on Friday. Yeah, he came to me and he said, I want to put together a program to just give free education to the traders. I say, we sell a lot of stuff, but I want to help, add value, have purpose, right? And so myself as well, like we're not just trying to sell stuff here, guys. Like we're a business, we have to sell things to keep the food on the table, so to speak. But at the end of the day, we want to see you guys do very, very well. And like I said, if you're following what I'm doing right now on today's strategy and you're using this signal system, you'd be long in the pre-market, which I don't trade, but you'd be long here for this trade and long here, and this trade's going to go and hit the highs, right? And yeah, Jim's a great part of our team. Yeah, no, it was a great way to give back, right? So there is resistance right here, right? So there is resistance here and here. So those will be 0.5 target. So I could peel off, let's say, 5 contracts here, put a target here, sell 5, and then sell 5 at the highs, and move my stop to break even once I take my first target. See what I'm saying? See how patient I am. See how calm I am. See how confident I am that this trade was going to hit targets. Do you see? Do you not hear me say this trade's going to give me a profitable trade? You not hear me talk to the market and tell myself that this trade is going to hit targets? Because I know that this strategy is one of the best trading systems I've ever traded. I know when the signal comes on the 15-minute that it's going to work. I've tested it for 3 freaking years. That's the confidence I have in the HATT system. It's so good that I coded the algo first to prove that I wasn't playing tricks on my mind. And then I traded it manually just to show myself. Yeah. You have a +4 profit factor. Yes, I do. Yes, I do. Nearly 5. Yes. But it's not about bragging. It's not about being better. It's about making a difference. Like you could, if you just did what I did, you're doing right here on the 5 minute and the 15, you're going to make a lot of money. Like this strategy, just with this desktop, like the HATT indicator desktop. Let's save this, right? Now, it'll only work with the signals, right? It'll only work with the signals that I'm doing this. But I mean, if you guys are buying the indicators to do this, the signal system that we built, um, you can have this desktop. I can give it to you tomorrow. Let me run a poll because what I want to do is I want to follow up with an email with some deliverables for you guys. Can you let me know if you guys are planning on purchasing the indicator system that I put in the chat? Um, this isn't some hard sale, guys. This is just my strategy that we're trading, and we added it into the marketplace. And I'm just going to run a poll here, and if you guys can just let me know, give me 1 second here. One second. And if you could just fill in this poll, um, let me know if you're purchasing. If you would like to speak to, if you're going to purchase the signal system, I just need to know. I have some stuff I want to send you guys that are over and above this. Yeah, if you're an ATS member, you don't need to buy this. That's the benefit of being in the ATS. Yeah, it's the benefit of being in the big program. You get the indicators and the algos. Yeah, but that comes at a price, right? You pay the value for that, right? But if you're going to purchase this, if you're not a member of the ATS program and you would like to purchase this, yeah, it's no problem, Kent. It's not going anywhere, right? I just need to know because we have some stuff we're going to send you. I'm going to send you some desktops. We're going to send you some template settings. Um, I'm gonna be trading this tomorrow. So now that we've gone over this and we've gone over this together, um, tomorrow we can just trade it, and we can essentially trade it just like what I'm doing now. Yeah. And look at how clean of a trade the 5 minute was, the second 5 minute signal. Like, yeah, okay, it probed for divergence on the bottom. But, if you entered here, right, maybe the first candle you got a signal and you had your stop in the right place, you would not have got stopped because we calculated the ATR. That's the point of it, right? And you would not have been stopped. But if, let's say, you didn't take the first signal and you took the second signal, like you'd be in a really big trade right now on a 5 minute chart. Yeah. And like, why do I? And you say, well, why do you trade the 5 over the 1 minute and the 2 minute? Because I have 3 years of data that proves to me that the 5 and the 15 are superior. So why would I trade an insuperior time frame? It doesn't make any sense to me. Like everybody does things for freaking reasons that doesn't make any sense to me. It's like traders, oh, I got to trade the Nasdaq. I traded on this. Okay, well, how's that working for you? Are you making a lot of money? Show me the statement, right? For me, I'm all about the data. And I care a lot about results. I don't care about being right. I don't care if I get stopped out. I don't care. Like, I care about making money. I don't care about being right. I like having big R multiples. I like having bigger trades. Um, it's really good for prop firms because you're not scalping too many times. Like the prop firms can scale you. If you trade these types of strategies, you're going to get somewhere fast in a prop firm. That's the thing. If you try to trade strategies where you have to have like an 80, 90% win rate, you could blow up pretty quick on a bad day, right? And I try to trade moves that give me a much bigger move, right? So like let's just do the calculation on the 5 minute here. So the 5 minute ATR is 257, right? So 257, if I entered on that long trade here, 257 times 2 ATR is 500, right? So that my stop loss would have been right here, which would have put me right around there, 500, right? So at the second 5 minutes, approaching a 1-to-1 right now, right? Which is pretty good, right? For the 5 minutes, a big 1-to-1 trade, right? And to go up to where my targets are, that would be about a 2-to-1 trade. On a 5 minute chart, that's a great trade. It's a great trade. You're on the right side of the market, doing the right things for the right reasons. Make sense? So it's, yeah, and the entry's here. So I'm going to put it here. Like I said, you can choose 5 minute, 15 minute, whatever you decide. I mean, I can't force you to pick a time frame, but I know what I'm going to do. If you could please answer the poll. The poll is only for people that are non-ATS members. ATS members automatically get this. It's part of the pros, right? Part of the pros of the big program. But if you're not in the big program on the ATS and you would like to use the tool and you would like to get the indicator at a really, really big discount, I'm doing the discount because of the workshop, right? I wanted to put together a workshop and teach how to trade it. I think it's a better way to use the tools, right? Rather than just doing a webinar and saying, "Hey, look at this." I'd rather show you it, trade it, give you the results, give you the stats, tell you why I trade it. And it's just, if I was a trader on the other side listening to an instructor wanting to teach, I mean, I would want to know that it's going to make me a lot of money before I started putting money behind software and systems, right? So, yeah, that's why I decided to do a workshop over this couple of days, right? So I think that's it. I think I'll leave it at that. I'm going to manage this trade. Sarb says, I couldn't agree more. This is really helping a lot. Yeah, I hope you guys like the new format for, presenting tools, right? Like for us, I think it's just a better way to help you guys get good at what we're doing. Remember, you guys have access to the document that I gave you here. This is for you guys to keep, right? And we're going to get up tomorrow and do it all again, right? That's the whole point, right? There's the document. Okay, here is the opportunity to purchase this at an insane discount. Insane discount. And everybody that buys it, we will send we will send you the desktop so you don't have to build it. I'll just give you my settings in the morning, right? So that'll be important. And anybody that would like to talk to Jason and talk to the sales team, then you can put your phone number in and we will call you, right? But not too bad. Probably going to make a couple $1,000s on this trade. Type of Y in the chat box that you guys are that I've done my job here today, that you feel like you've learned what you needed to learn from this. And then tomorrow we're going to come here with a fresh set of eyes, knowing exactly what we're going to be doing. Makes sense? Great. I'll take screenshots of the trade, how it works out, win, lose, or draw, right? It's always good to take a screenshot of the trades. I like to do that. I like to do that pre-market, pre-trade, and just let's do this here. Take a screenshot of that bad boy right there, and we'll save it, and we'll put it on that. We'll put the pictures together when we post it in the community. Yeah, no problem, Nick. Yeah, I hope you guys are all here tomorrow, right? That's the point. Hope you guys are all here tomorrow, and we can Now, there's no sense on me putting any risk on now. We're already at the first target. There is absolutely no sense for me to have risk on this trade. So this is where you go to break even. This is a risk-free trade now. It's free money, right? Now I don't need to worry about risk and reward because I have unlimited reward and zero risk. Right? So that's the whole point, right? Paul says, I love the way you do things. I love the way you explain things. Yeah, well, it's been doing this a long time, my friend. Yeah, and the confidence comes from just the jabs. You know, a boxer is confident, steps in the ring. It knows that it practiced 1,000 days. Like, you know what I mean? A boxer knows how to throw a punch, right? This is a 1-2 for me. This is a punch, jab, cross, hook, uppercut, and yeah. Kenneth says, where do I find the ATS group in the marketplace? What do you mean the ATS? If you want to be a part of the ATS, you mean? Kenneth says, where do I? Yeah, okay. So if you want to be a part of the ATS, which is the big syndicate, you need to book a call with my team. I'll show you where to do that. You go here, you go under the syndicate, go to Alpha Trading Syndicate. If you're interested in the big program, which is tomorrow, we launch the quant one. This is for discretionary traders. Okay. Anybody that wants to book a call with Jason to join this program, this is the biggest program we've ever built in the history of all of our companies. This is the future of our education here. So if you're interested in this, you need to book a call. Down at the bottom, there's coaching, one-on-one coaching. There's just a ton of stuff here, but all you got to do is just book a call. Book your call with Jason, and you will be able to talk to him today or tomorrow, whenever you can get on his calendar. And when you're in the Alpha Trading Syndicate, you don't have to ever pay for indicators anymore. Does that make sense? You don't have to pay for indicators. You get them free when we launch them. It's part of the program. It's part of the big package. Now the big package is expensive, Kenneth. I'm just giving you a heads up. It's expensive, but it's a big program. You get one-on-one coaching. You get a dedicated coach for 3 months. You get trade room access, afternoon class access. You get all the software in the marketplace. You don't have to buy launches. Like, it's a big program. And the quant program runs tomorrow. And that'll be the first time we've ever run a quant trading room with quant instructors for algos. And we have an algo testing team that we brought in. We've got 3 people running algo tests. And it's just incredible. Like, if you've ever had an algo and you don't want to ever have to optimize, right? Then that's where we've got a team that's optimizing templates every single day, providing templates to algo traders forever. You'll never have to optimize another strategy. Our team does it for you. We provide you templates every Friday so that every week you go into the next week with all your algo templates. It's going to be incredible. It's going to be one of the biggest webinars we're ever going to do is tomorrow afternoon. Yeah. I think we're going to peel off some profits here, guys. Getting a lot of hesitation at the top there. There it is. So I've just taken 50% of my target, and I'm just going to trail my stop now, right? So that's a successful trade, right? Like I said, it was a very successful trade. Jeez. Just in, explosive device detonated outside the Federal Plaza in New York City. Suspects in custody. Well, I live in Mexico. I see it all. Right. So, guys, I got your poll answers here. That's great. Everybody that answered yes, we're going to follow up with an email and make sure you get everything. And then everybody that asked for a phone call, I will give Jason the information. He will call you. Okay. So, guys, have a fantastic day. And I hope you guys enjoy the rest of your day, and hope you enjoyed the first day of the HATT Signal System Bootcamp or workshop. And tomorrow we will just get into trading. We will just talk and trade, and we will do everything tomorrow like you guys are experts. Have a fantastic afternoon, traders, and we will see you bright and early tomorrow morning. Take care.